Hello and welcome to ProdataTraders.com, your go-to podcast for deep stock analysis and market insights. I'm Anjana, and today we're diving into the latest earnings report from Data Patterns India Limited.
And I'm Sudarshan, market analyst. Ready to break down the numbers and give you a comprehensive look at what's driving this defense and aerospace stock. Data Patterns recently announced its Q3 FY25 results, and there's a lot to unpack. Let's get started.
Data Patterns reported revenue of 117 crores this quarter, showing a 29% quarter-on-quarter growth. However, year-to-date revenue stands at 312 crores, which is a 7.5% decline compared to last year.
Yes, and while the revenue dip is a concern, the company has maintained an impressive EBITDA margin of 40% over 9 months. Gross margins for Q3 hit 80%, which is quite strong for a company in this sector. This suggests that they're optimizing costs well despite revenue fluctuations.
The order book is another bright spot. Data Patterns now holds orders worth 1,184 crores. Order inflows for Q3 alone reached 240 crores, bringing the 9-month total to 324 crores. That's a sign of steady demand, wouldn't you say?
Absolutely. A strong order pipeline, especially in the defense sector, provides stability and long-term growth potential.
One of the standout trends in Q3 was Data Patterns' growing export business. The company's international order book now stands at 106 Indian rupees crores, with Europe and East Asia as key markets.
That's a smart move. Diversifying revenue streams through exports can help smooth out domestic defense spending cycles. Plus, the company is heavily investing in R&D, and it plans to showcase new products at the upcoming Defense Expo in Bengaluru.
Speaking of government spending, India's defense budget for FY25-26 is 6.8 lakh crores, with 75% allocated for indigenous defense equipment. This should create opportunities for companies like Data Patterns.
Exactly. Government support for domestic defense manufacturing is a strong tailwind for companies with a solid local production base.
Looking ahead, management expects a revenue growth of 20-25% for FY25, with EBITDA margins staying between 35-40%. They're also targeting 20-30 billion in new orders over the next 18 months.
That's an ambitious goal, but achievable given their strong participation in major defense contracts. However, investors have raised concerns about order execution and revenue realization, especially with some delivery deferments impacting Q3 numbers.
Right. Inventory days have also increased from 155 to 187, mainly due to large radar contracts. The company expects these levels to normalize soon.
That's something to monitor. Efficient inventory management is key to maintaining cash flows and profitability. The company's net cash position is strong, but prolonged delays could impact earnings.
Data Patterns is currently trading at a PE ratio of 52.53, which is higher than the industry average of 33.69. What's your take on this valuation?
Before we dive in, make sure to subscribe to our channel. Your support motivates us to bring you more in-depth analysis. It's a premium valuation, no doubt, but it reflects investor confidence in the company's long-term growth potential. A debt-free balance sheet, strong margins, and a growing order book justify some level of premium pricing.
However, some investors are concerned about high valuation risks. The stock has also seen volatility in recent months, dropping nearly 40% over the past 6 months.
Yes, but in the last week alone, it gained 14.58%. Short-term traders should be prepared for fluctuations, but long-term investors may find it an attractive entry point, especially if order execution improves.
To summarize, Data Patterns has strong fundamentals with a growing order book, high margins, and export potential. However, inventory challenges and high valuations remain key risks.
Investors should watch for Q4 execution, new contract wins, and how well the company navigates supply chain challenges. If they deliver on their growth projections, the current valuation could be justified in the long run. This analysis is based on the Q3 FY25 earnings conference call transcript, Q3 FY25 investor presentation, annual report 2023-24, fundamental and technical analysis of Data Patterns India Limited, and is intended for informational purposes only. It should not be construed as investment advice. Please consult with a financial advisor before making any investment decisions.
That's a wrap for today's episode of the ProData Trader's Lens. If you found this analysis helpful, don't forget to subscribe and share. Until next time, happy investing!